Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. XLK, Apple, and Facebook on the daily weekly time frame. So the tech sector has lost the daily higher low pattern, and we're on the verge of a bearish TCG cross for the first time in a couple months. We have a bearish MACD cross. And we're looking at the middle Bollinger Band. The last time we had a bearish MACD cross, it was very brief. It was 3 days of consolidation, and we held the middle Bollinger Band. So this middle Bollinger Band will come into play at the end of the week and perhaps early next week. And we'll see if the bulls can hold it or not. If we start setting lower highs and lower lows very clearly, we're going to be looking down to this gap at 61.16. But as of right now, it's very healthy consolidation. We are just in consolidation mode. And the weekly time frame, that doji was our signal in terms of bullish, strong closes at the high of the week, 6 weeks in a row. Bearish reversal doji, and now we're following through and confirming it with a lower high and lower low this week compared to last week. Apple on the daily time frame is leading the way to the downside. Very significant weakness. Look at the increasing bear volume. The close at the low of the day yesterday was definitely notable, as it was the weakest tech name, and nobody else was closing that week. And then we have this big gap down open. So now we have gaps in multiple places. There's a gap to the downside at 167.90, and there's a gap to the upside at 171.18. So the bears definitely have momentum in their favor. This is the first time, yesterday was the first time we lost the exponential support since earnings run up. We have a bearish MACD cross closing in, and we're looking for healthy consolidation. The weekly time frame pulling back, and we can pull all the way back to 160 and still be very healthy in the longer term uptrend on this weekly chart. So keeping an eye on Apple, as I've been saying, Apple is the most important name in the market in my opinion. The tech sector has a really significant impact on the S&P 500. It's the largest holding. And Apple is the largest holding in a lot of tech sector ETFs. So it is Apple that is essentially the most single important name in the market, in my opinion. Facebook on the daily is seeing a bear break of its equilibrium pattern. We had our high, low, lower high, higher low, and a gap down bear break of 176.71. So we now have a lower low. Even though the bulls did buy the dip, we're still seeing lower highs on the daily, exponential resistance now. And we're holding the middle Bollinger Band, but if we lose that level, there's not a ton of support in this range. There's a gap at 172.28, but because we shot up here in response to, I believe this was Amazon and Google earnings that we started getting priced in, we don't have a lot of support in this range. So if we do continue with lower highs and lower lows, we could pretty easily head back to the low 170s. The weekly time frame, bearish reversal candlestick, bearish indecision doji. This is a bull flag right now. This is healthy consolidation. There's no red flags longer term. If we hold exponential support on this consolidation, we'll be looking to see if the bulls can get some continuation. And there's no red flags is the bottom line. So just to sum it up, short term, bears in control. We're in consolidation mode. Longer term weekly charts, bulls in full control, healthy consolidation that has been overdue. And we'll see if that changes. It's going to require big bear volume for us to be looking for anything more than normal healthy consolidation. We'll check back in tomorrow. See you then.